welcome to your Monday Market Outlook. My name is Matthew Buckley. I'm the Chief Market Strategist here at Wealth Creation Investing. Got an action-packed week on our flight schedule that's going to, either equal or be more wild than last week. Last week, we saw triple-digit moves to the upside and the downside, a little bit of a spike in volatility, and we're going to try and make sense of it all because we need to decide or figure out on our radar whether the market's found some footing after the tsunami, the recent kind of storm that's blown through, or if we're going to see further move to the downside here. Why is the market up today after last week's whipsaw market? Well, retail sales came in better than forecast. Most of the 500-pound heads were looking for about a 0.5% increase, excluding autos from February, and we saw a 0.8% increase. So beat on retail sales. So that's going to put a smile on the face of the market. And Citi came out with earnings, and the analyst consensus was looking at $1, and they came in at $1.11. So they obviously beat. However, stock was up about 2%. I think it's pulled back a little bit since then. There's a ton of baggage with Citi, folks, and same thing with Wells Fargo on that released earnings on Friday. If you're new to investing, let's clear one thing up. When you hear the term financials, or you hear about the XLF, which is an ETF that follows the financials, let's take a look at our TradeMonster platform. And you can open a free paper trading account with our strategic partner, TradeMonster, by going to trademonster.com/WCI. It's just a great platform with a lot of tools. But the XLF is a basket of financial stocks. As a matter of fact, it represents who's in the XLF: Wells Fargo, Berkshire Hathaway, JP Morgan Chase, Citigroup, Bank of America, Bancorp, Amex, Goldman Sachs, MetLife, to name a few that make up the XLF. But folks, each one of those that I just rattled off do completely different things. Even though they're kind of lumped together as, quote, financials, Wells Fargo and Citi, for example, have a big old albatross around their neck, and that is from the mortgage overhang and just the real estate market. It's an absolute clown car and train wreck still for these financials. So Citigroup, Wells Fargo, as you can see, they just came out with earnings. That's that little E right there, and they beat. But Goldman Sachs, folks, and the reason we care about Goldman Sachs with one of our subsidiaries at Top Gun Options is because we have a bull put spread. It's called a tactic called a bull put spread. We're looking at the 115, 120. We need Goldman Sachs above 120 by Friday. Goldman Sachs comes out with earnings on Tuesday. That's tomorrow, and analysts are looking for about $1.9 billion in cash, or about $3.55 a share. Folks, Goldman Sachs is not a Wells Fargo or a Citi. Yes, it's a financial, but folks, they do not deal with mom and pop investor like you and me. They deal with institutional money. They have trading operations and investment banking operations. And their trading operations, like we've talked about in our live trade briefs at Top Gun Options, unless Goldman Sachs hit their head last quarter and it became completely unconscious, they probably printed money. The trading operations of Citi and Wells Fargo and even JP Morgan on Friday, when they reported earnings, also printed money. But the reason they didn't see a big rise is because they also warn that they still have the housing albatross hanging around their neck. So folks, keep an eye on that, because all financials are not created equal, and some of them, all animals are equal. Some animals are more equal than the others. So tomorrow, taking a look at Goldman Sachs. What else is on our radar? Well, of course, tomorrow, if you don't pay your taxes, you're going to see what's his name, Madoff, in prison. So make sure you file your taxes by tomorrow if you owe them money. But Tuesday is a big day, not only because of Goldman Sachs earnings, but the Census Bureau is going to release data on housing starts and building permits for March. Now, most of the heavies expect starts to come in at about 680,000. That's going to be down from 698,000. So if, just intuitively, if we beat and don't have housing, and if housing starts to actually do well, the market's going to take that as a good sign. So housing starts tomorrow. Wednesday, another big financial. American Express is going to report. American Express, again, lumped in with kind of the financials, but is completely different than a Goldman Sachs. American Express, they obviously deal with credit and consumer credit. So that'll be interesting The consensus is about $1.03 a share versus 97 cents a year ago. So we'll see if American Express is going in the right direction there. And then after that is Yum Brands. Now, Yum, you might be thinking like, okay, is that like candy or no, folks? Take a look at what Yum does. They have a ton of different restaurants and under the Yum brand, and they've been really expanding into China. So it's really going to, taking a look at the chart there, it's really taken an upward escalator to the right there. So Yum should be pretty interesting here. Folks are expecting them to earn 72 cents a share in this past quarter, up 14% from a year ago, and that's mainly on their China strength. So take a look at Yum. Thursday, jobless claims. Jobless claims are released by the Bureau of Labor Statistics, looking for a slight rise this week to about 390, and then forecasting a drop next week. And then existing home sales for March also come in on Thursday from the NAR. That's the National Association of Realtors. So make sure you take a look at those because that's going to be big. And then what's big for us at Top Gun Options? Bank of America. We have a Bank of America diagonal on. And if you're new to investing, a diagonal is you're two of something. In this case, we are long-term bullish on the financials and on Bank of America in general. They're going to lead us out of this recession because we're still in it, folks. I got news for you. Banks, financials tend to lead us out of recessions historically. And I'm saying historically because I don't know if that's going to happen this time. But we're long-term bullish on Bank of America and short-term bearish. You can have two opinions. That's the beauty of options. So we're looking at Bank of America. And if you have any questions or concerns about options, make sure you take a look and visit our strategic partner, topgunoptions.com, and they can hook you up. So Bank of America earnings, and then on Friday, Mickey D's. McDonald's reports earnings, and that's McDonald's is always an interesting earnings report because it's kind of counterintuitive because if the economy is doing bad, McDonald's usually does good. Does that make sense? McDonald's dollar menu. If you're worried about your job or feeding your family of four, you're obviously not cooking steak dinners or going to Ruth's Chris Steakhouse once a week. So McDonald's actually tends to do well when the economy is not doing so well. So, and as you can see down here on our Trade Monster platform, for the past 4 quarters in a row, they've beat, and they've got earnings coming up this week on Friday, like we talked about. So a lot going on in this week. So stay tuned to the wealthcreationinvesting.com site and our strategic partners that have great options, futures, and Forex information because they'll be putting out some great videos as well. So, folks, Chief Investment Strategist here at WCI, Matthew Buckley. Hope you have a great week. Like I said, visit our strategic partners there, our options, futures, and Forex partners. And I will see you Friday for our WCI debrief. Happy hunting. Make sure you hedge. Have a great week.